So last week I sold my shares of ASML just to buy Evo. And since that decision, ASML is up, Evo was down, but that's not the mistake. I still think selling ASML is not the big mistake I was making. Even though ASML shares have been going up, I was up 45% on those shares, but buying a worse company, that was the mistake because Evo right now is still dealing with a lot of headwinds, especially in Asia. They came out with their report and it's still not looking good. The turnaround is coming really slowly and it's just still up in the air. It's not sufficient enough just to be up in the air if you're gonna sell a company like ASML to buy Evo. So that was my big mistake, going to a good company or a very strong moat company to a company with a moat, but it's still dealing with issues, which is Evo. So that was one of my mistakes. And if you're gonna sell a company like ASML, we all know it's so dominant. The service revenue is gonna continue to grow. We see AI picking up. You know, like stocks like TSM, like Samsung, all of these companies are gonna need more machines to make more chips. So if you know the overall trend in the industry and ASML is a monopoly in this industry, it's gonna be up and away pretty much. It's not the good idea to sell that for Evo, which is still struggling. It's still not turned around yet. And they don't have an answer for Asia. When you're investing, these mistakes are gonna happen. You're thinking of, oh, this company is selling very cheap. It's 11 PE. It looks way mispriced. And you have this other company going up so much, so fast, 45% for you, that you're like, damn, I can get these huge profits, put it into this company that's super cheap that might turn around. If it doesn't turn around, you're gonna be mistaken because you're selling a high quality company like ASML. And that's what happened to me. Evo didn't turn around how I thought it was gonna turn around next quarter. So I ended up actually gaining 45% on my ASML shares and losing 10% on my Evo shares. After the bad quarter, it went down 10% and I sold out immediately. And I already used these proceeds to buy into other companies that are going through headwinds. I might talk about it in my next video because they're super cheap and they're really unloved at this point. So I might do a video on that. But overall, I just want to be transparent in this video, saying that like all my good buys, all my sells are not always going to be amazing and top tier. So what I learned from this is that if you have a truly great business like ASML and you have a company that's still in the turnaround phase, but it's cheap, that doesn't mean that you sell the amazing business that's already doing good, that's growing its revenue sufficiently for a less business, even though it has a moat, even though it's strong, etc., it's still in a turnaround phase. It still doesn't know how to regain its market and how to re-accelerate the growth that I was seeing in the past. So just stay in these high quality businesses as long as they keep performing, as long as the thesis doesn't change. Like you gotta keep in these businesses because you don't know if you're gonna ever get another opportunity to buy into it again, because we know these businesses always sell down, but what if it never sells down? What if it only goes down 10 and 15% and you never have a chance to go right back into the company? So keep these high quality businesses, especially if you're looking 10, 15 years out. So that's it for this video, guys. Tell me what you think about my bad mistake. Do you make these mistakes all the time? What are you doing to prevent it from happening again? Guys, like and subscribe to my channel.